Hey everyone, welcome to the KE Report and a daily editorial. Tuesday, July 22nd, chatting with Dave Erfle, founder and editor of the Junior Miner Junky. Dave, we're continuing to see a very strong environment for precious metals, and just recently, even more so this week, maybe tail end of last week too, what's playing out here is what I was hoping for, where the gold price starts to take a lead, but even more so the gold majors. It had been a bit boring of a time for the gold majors as money rotated down the food chain into lower quality companies. Quite frankly, there's some crappy companies out there that I have seen that have doubled and tripled in share price on the back of not a whole lot of news. And that's one thing I was worried about is that the majors had lost some of their momentum and gold had lost some of their momentum as the juniors caught up and even silver played catch up. Silver's still doing well, but the gold majors are doing quite well right now. We're even seeing Agnico up 5% today, Newmont up 3%, and this is after yesterday of some nice moves. And tail end of last week, some nice moves. It's what I wanted to see where gold starts to take the lead and it gives us some new all-time highs. It's not there yet, but at least it's trending in that direction. Dave, what's catching your eye about this market? And as always, the rotation trade, but now a bit more of a focus being in, at least in the gold space, bigger companies.
Yeah, I mean, so much for summer doldrums, right? Usually, this time of year, the past few years, this time of year, it's been a time to reflect on what hasn't worked in the mining space. And it was considerably a lot of companies that didn't work the last few years. So investors were thinking about what they were going to sell for tax loss and how much cash they were going to build up before the end of the year and looking at tax loss selling season to maybe add to more positions. But in a bull market, these breakouts and these consolidations, they end when you least expect it. And I know a lot of investors were expecting more summer doldrums and sideways action. But if you take a look at the gold price here, I mean, it's basically done what it did right after Trump was elected president, right? We had the gold price run up pretty far, pretty fast in an expectation of Trump winning the presidency. And then it was a sell the news event, and gold consolidated for about 13 weeks. It had a nice 10% correction, and then it consolidated within a bullish symmetrical triangle for the next 13 weeks. And that's exactly what happened again here when the gold price rose up to $3,500, got a bit ahead of itself, had a 10% correction, and now it's consolidated within another 13-week bullish symmetrical triangle. And it's attempting to break out of it here right now. And if it happens, if the gold price has a close above 3450, the gold futures close above 3450 at the end of the week, that would be an all-time weekly closing high right when earnings season is kicking off, when Newmont announced its earnings that we talked about last week on Thursday. So, I mean, if Newmont knocks it out of the park, followed by Agnico Eagle, right when the gold price is breaking out, that'll be very bullish for the sector. And then we haven't even talked about silver yet. Silver today has made a daily close above $39 for the first time in 14 years. So it's all happening on the bullish side of the ledger here for the precious metals as we dredge through what is normally summer doldrums.
Yeah, Dave, boy, those people that sold in May to go away probably misfired this year because we've had a lot of action in June and July. And yeah, like to the point you just made about silver, it's getting pretty darn close to $40 here. It'd be great if we saw in about a week here and 7 different trading sessions. We're close to the end of the month. We could have a chance to put the highest monthly close in silver. But just focusing on back on gold and the big companies, like we mentioned at the onset, all this anticipation of looking at Q2 earnings that are going to start getting reported with, like you say, Newmont and Agnico. But there's also a lot of mid tiers that are going to be putting in on a percentage basis their biggest quarterly revenues ever. I expect to see a lot of those press releases, largest revenues generated of all time. Do you think that this is going to catch more generalist attention that screen for earnings? Will that show up on more radar screens for people that don't normally follow the mining stocks?
I think if it coincides with the stock market rolling over, right? Because let's face it, generalists are back to being distracted by the stock market, which is trading at all-time highs again. The airwaves are full of Microsoft and Nvidia, and the stock market continues to make all-time highs. Gold stocks are still pretty much an afterthought, which is a good thing. I mean, there's no, over enthusiasm is in the gold sector, right? I mean, they're still pretty much talking about AI.
Is it because the gold stocks are simply too small? Like, as much as we talk about the majors, they're still pretty small in the whole scheme of things. And then you go down the food chain to developers, mid tiers, and the juniors, and they are technically all juniors when you take into account that many investors think that sub $1 billion market cap companies are junior companies. That's the vast majority of this sector. Is that one of the biggest problems, too? Is that it's a small sector and people just don't go that far down the food chain?
Yes, that's another reason. Absolutely. The industry has, earlier, the last several years, they've been trying to fix that by consolidating. We had several major mining companies consolidate together to make bigger companies. And we've talked about this earlier. Newmont is the only gold stock on the S&P 500. So there's not much choice either for investors. Of course, that we are seeing more ETF investment, not only in gold and in the gold miners, but it's been pretty much a trickle. It's moved up, but it hasn't really moved up considerably. So I think we need to see the stock market roll over again, and investors need to start looking for, hey, where should I park my money for safety now that it looks like the stock market is going to have another correction?
Well, Dave, just speaking of the ETFs, that is probably how a lot of generalists would access the sector for the first time. Any levels you have in mind as far as overhead resistance we need to clear, or any support levels that you're watching for on any pullbacks?
Yeah, well, as far as GDX is concerned, if you take a look at the long-term chart, reached 66. If you take away what stock charts does is they pretty much give you a price that is adjusted for dividends as an all-time high, and that's 60. So if you take that away, it's 66. So the initial target for GDX is 60, but I wouldn't be surprised to see it run all the way to 66 here on this move before we see a decent correction. I mean, we've had the gold stocks trade sideways here for a while. They've been pretty much correcting in time along with the gold price. But an interesting thing is they've kind of catched up. They've kind of caught up technically. The gold price has been consolidating above its 50-day moving average, and the gold stocks have been doing the same. When in the past, the gold stocks were lagging, silver was lagging, silver stocks were lagging, and they hadn't reached the technical levels that the gold price had yet. So they're pretty much in sync now, but there's still a lot of catching up to do as far as valuations are concerned in the gold stocks in relation to the gold price.
Dave, do you think that's true even for some of these juniors? Some of these juniors that were kind of dead in the water for months, if not years, their stock price wasn't moving. Now their stock price is moving, even when they still need money, even when they haven't come out with any news. Some are up two, three, four times. Do you still think that a lot of these juniors are undervalued?
I do. I mean, if you take a look at what they're trading in relation to what they have in the ground, if they're a late stage company, if they're at the finance stage, or even if they're fully financed, waiting for permits, or even if they've got their permits, they're fully financed, and they're about to start construction, or they're about to make a construction decision, they're still trading. A lot of them are still trading at less than $150, $200 an ounce on the ground, which is very cheap. And the earlier stage companies are trading, many of them are trading at less than $100 an ounce in the ground.
Well, Dave, when you think about the margins, just how fat they are for the producers, and it doesn't have to just be the dozen or so majors. And when you think about the several dozen mid-tier producers of gold, they are making so much money right now, but when you look at how the ounces in the ground are being valued for developers, it's almost comical where it's at. I mean, some of
It
it's at,
is.
they're making $1,500 to $2,000 an ounce pulling it out of the ground, but they're valuing developers at $50 an ounce or maybe $60 an ounce. When are we going to see that M&A deluge where these companies say, "Hey, it's time for me to not just make money and pay down debt, but it's finally time to grow resources"?
That's a great question, Shad. I've been wondering the same thing. I'm sure every once in a while we see a deal, but it doesn't spark a wave of M&A. We see some deals and then it calms down a bit for a few weeks. Then we see another one, maybe two, and then it calms down again. Maybe it's going to take the conferences in Beaver Creek, followed by the Denver Gold Forum, where they get together again, and the BMO conference soon thereafter, before we start to see more M&A in the sector. But a part of me doesn't want to see a lot more M&A just yet, because I own a lot of these stocks, and even though some of them have more than tripled, I think there's still a lot of value left in the market to take them higher before they get a takeover bid. So, I get into these things, for multi-bagger potential. And if they're taken out a little too soon, sure, I'm happy that I've done really well for myself and my subscribers, but I'd like to see them run on their own more before they're offered a nice premium from a major or a mid-tier.
Where do you expect the M&A to come from? Everyone points to the majors, but quite frankly, the majors seem pretty focused on really large assets, and even ones that are much further down the development or building road. Then everyone's looking at the mid tiers, but mid tiers don't exactly carry huge cash balances. They are starting to build some of that up, but it's still early on for them building up some of this cash, especially if they just built a mine. Where do you see M&A coming from? Who is out there to buy these?
Well, I still think it's going to be the majors and the mid tiers, because, like we said, they're about to announce these fat margins and all this cash they're going to have on the books, and investors are going to clamor even more for, hey, we need more ounces. So I still think that's where it's going to come from. And they're watching them. They're watching these companies, and they're seeing what's happening with the gold price as it gets farther and farther away from 3,000. And they're going to have to start to realize, hey, the gold price is not going to go below 3,000 again for quite a while. We're going to have to go into the market and add ounces before these stocks really start to run away.
Well, Dave, just considering where the metals prices are for both gold and silver, I continue to be shocked and dismayed when I looked at company slide decks and I see their metal sensitivity tables cap out at something like $26 silver or $3,000 gold. We've been well above those levels for a long time now. Is the industry shooting itself in the foot by not playing to its strengths? Because any other sector, if you're doing Nvidia and chips, you would talk about the price they're going to sell chips at today. If you were doing cars, you would talk about the price you're selling vehicles at today. But this industry is so backwards looking, and it's got 3-year trailing stops and all of this, that some of these companies don't even have sensitivity tables that even have where the metals are at a spot price, much less an upside case. Their upside case is below where we're even at. So are we doing a bad job as an industry, even marketing to people that could be interested clients?
Well, I think some of them are, but a lot of these companies now are more forward thinking. So when they release a PEA or a PFS, or especially a DFS, they put how much the project will make at a much higher gold price at spot, and at 3,000 and at spot. So I'm seeing that more and more, where these companies are updating their economic studies, or they're putting out new economic studies with these higher gold prices and higher silver prices, especially silver. I see what you're saying, because a lot of the silver prices are still at $25 and below.
But Dave, when you're looking at these economic studies, yeah, at these prices, pretty much everything makes money. How do you isolate what is a tier one, a tier two, essentially a more attractive project for a major to take out?
Well, you look at jurisdiction, right? And you look at the proof of concept. Has the company done a really good job of showing that this project can get much bigger? By drilling farther step outs and showing, hey, this project has already gotten to 2 or 3 million ounces, but look at the potential. We've done a proof of concept model where we're looking at 5 or 6 million ounces, and we can make it bigger. And if you've got the management team that's got a track record of doing that in the past, and the company has access to capital, because a lot of these companies that didn't have access to capital, now they do. We talked about last week how a lot of these companies now are attracting strategic partners. So now they have the access to capital, and a major or a mid-tier has come into the stock and taken a small position.
Someone brought up an interesting point on the show yesterday, Dave. Want to run it by you, that they saw the biggest impediment to more M&A was the capex that is needed for some of these projects, because there's a lot of great projects that have multiple millions of ounces of gold in the ground, but they also take $1 to $2 billion to build. Do you think there could be a wave of M&A that's more focused on, let's say, the 200 to 500 million capex range, and that maybe that's the sweet spot to play?
Well, that's the sweet spot for M&A for mid-tier companies, yes. But a lot of these projects that have gotten to the finance stage Some of them are already fully financed, and some of them are already being constructed, and some of them have already been constructed, and they're still sitting there waiting to be taken out. So that might be a small excuse, but it's not the only excuse.
Yeah, that's a good point too. And quite frankly, look, we do need a lot of money to build these assets. We also need a lot of time. It takes time, it takes money, it takes people. That the money thing is starting to sort itself out because more people, more money is coming in, but still the people aspect and the willingness of majors to come online. Let's also face it, in the gold sector, if we bring on all kinds of production, that's not necessarily supportive of a higher gold price either. Let's just keep production pretty stable, keep moving it along, and as long as the demand side continues to show the strength, the gold price should keep moving up. Dave, what comes next for this sector then? It just sounds, it's all so positive right now. As the broad averages are moving up, everything seems to be, well, it's a bull market in a lot of different sectors. A lot of people are making money. What comes next for this sector in the back half of the year?
Well, like I said, I'm looking at least a $4,000 gold price this year and a $50 silver price, and that would be a gold silver ratio of 80 to 1. The gold silver ratio now is trending in the right direction, which is lower. I think it's around 87, 86 right now. And I wouldn't be surprised if it even got down to 75 to 1 where there's been some pretty good support over the past several years. But it's all trending in the right direction. And as I said, gold stocks and the silver stocks, they still have a lot of catching up to do. So enjoy the ride, take some profit off the table if your position gets too big in relation to your portfolio. Definitely have a sell strategy. I learned early on in this sector that if you don't have a sell strategy, you end up leaving a lot of money on the table when this sector starts to go into a more serious correction.
Yeah, so far there just hasn't been a big correction. Some of those high flying metal stocks, precious metal stocks, especially gold stocks, took a little breather here over the last few months. And now if we start to see them pick back up, again, I just think that's positive for the whole sector as we get more of that quality leadership rather than that money rotating down into those lower quality companies. It's nice to be in a bull market. That's what we keep on saying, and we definitely see it being busier across the board for this early part of summer. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Dave, great chatting with you, and we'll chat with you again next week.
Looking forward to it, guys. Thanks a lot.